Now let's move on to the next session on the theme of the Kauffman Fellows impact, building global VCs and connecting Japan to the world. The panelists are Ms. Jessica Owens, Initiate Ventures founding partner, Mr. Will Prendergast, Frontline Ventures general partner,
I think they introduced you already.
Mr. Phil Wickham,
Jessica, I think they
Sozo
introduced you
Ventures
already.
executive managing director, Mr. Fernando Fabre, Kauffman Fellows CEO, and serving as the moderator for this session is Mr. Hiro Nishiguchi, Startup Genome Japan President.
Woo! Do you see any fellows?
Mr. Nishiguchi, the floor is yours.
Well, thank you very much for getting together. And today's session is really to talk about the globalization of venture capital industry and the startup ecosystem of Japan. With that, we'd like to ask Fernando to make the first presentations. And the floor is actually yours.
Perfect. Thank you so much. I don't know if we're going to have a presentation back here. I hope so.
Yeah.
And I think I'll probably stand up for, okay, so we have that just for, 6-7 minutes. First of all, and I hope you can hear me, I want to thank the Governor Koike of the Tokyo Metropolitan Government for their invitation to be here. What an incredible setup and organization of Sushi Tech. I think we're all blown away by the capacity of organizing, all in the power of supporting entrepreneurs. All right, so I want to tell you for just a few minutes about the Kauffman Fellowship and what is it that we do, and more important, what have we learned about the global venture capital world. So we've been around for almost 30 years. We select the best venture capitalists in the world to join a 2-year education program, very intensive. And after you complete the program, you join the network, a community, that supports you throughout the 10, 20, 30 years career that you're going to spend in venture, sort of the long game. There's over close to 700 venture capital firms represented. 1 in 5 unicorns over the last 10 years have at least one Kauffman Fellow on the cap table, meaning a Kauffman Fellow finds 20% of all the unicorns or the most successful startups in the world. These are some of the firms that you'll recognize some names. This is just name dropping. I'll move on to the next one. So the way that we define success in venture capital is the investors that find, invest, support, and exit the best startups in the world. And we define the best startups as those that redefine the category, the industry that they operate in, but they also redefine the venture capital firms that invested in them. So we call these category defining and franchise or firm defining startups. Category defining means that your startup becomes so successful that you change your industry. And if you have an exit, that is, if you sell part of your company in the public market or through a merger or an acquisition, the investors that backed you early on are also going to be transformed because of the windfall of resources that happens to that. So if this is how we define success in venture capital, we want to measure it. So we decided to create the Kauffman Fund Returner Index, which is the largest data set of venture capital successful transactions in the world, where we combine information from public data sources, private data sources, as well as a survey to 1,000 of our community, 1,000 members of our community, to ask the question, in how many startups have you invested that became a unicorn? How many of those startups had an exit? And how much money was created, how much value was created at that exit? So those are the things that we measured. And 2 ways to understand the report. First is, what did we learn globally? And then what did we learn about our Kauffman Fellows? So globally, what we found out is that just over the last 10 years, there has been nearly 250,000 startups that receive venture capital. And of those, only 1,800, so this is less than 1%, 0.7% of the startups reach the level of unicorn, that is $1 billion valuation. And of those, in the last 10 years, only 300 have had an exit at more than $1 billion. The second thing we learn about this global startup scene is that when you think of Silicon Valley, which is the epicenter of entrepreneurship, 1 out of 4 successful startups happen in Silicon Valley. But that means that 3 out of 4 do not. So half of all the startups that become successful are in the US, half of them California, half of them the rest. The other 50% of successful startups are spread all over the world. And I think that's very good news for anyone that is not in Silicon Valley, because venture capital and startup success has now become global. And the last thing that I'll mention is what we found about the Kauffman Fellows. So there are certain key findings. I mentioned before, 1 out of 5 unicorns on the planet have a Kauffman Fellow on the cap table. I think more important than that is that the face of success in the venture capital universe is really happening across multiple geographies and multiple venture capital models. So what you're seeing in this slide right over here is, out of 1,000 Kauffman Fellows, who are the top 10, the top 15, that have invested in the most startups that became unicorns, that had an exit, and what was the sum of the valuation or the value created of those exits. So you see a fund like Endeavor Catalyst by Alan Taylor. They have invested in 59 companies that became unicorns, 13 of those with an exit, with $25 billion in exit. Many of you will recognize Koichiro from Soso Ventures, as well as Phil Wickman, also from Soso, investing in US and Japanese startups. Yinglan, Southeast Asia, Justin Fisher, US, Frederick in Europe, Shalindra Sain in India, Clint Cover and Miriam in underserved US, Vinny Laura in Vietnam and Singapore, Eric in Mexico, Nathan Harroch in Switzerland. So as you can tell, these are, again, over the last 10 years, out of 1,000 venture capitalists, the most successful are not just happening in the US, they're not just the big brands, they're happening all over the world. With that, that's the last slide. I'm very happy that some of these Kauffman Fellows, some of these venture capitalists building their own firms are sitting with us. Will, Jessica, Phil, Hiro, thank you again for agreeing to join us here. I think we have a few Kauffman Fellows over here in the audience as well. Happy to see you all. So with that, I'll take a seat now. And why don't we start by each of you introducing yourself. Maybe you will. Tell us a little bit about what we do, and then Hiro and myself will start asking some questions. Will?
Super. Thanks, Fernando. Everybody can hear me okay? Hi, everybody. My name is Will Prendergast, and I'm one of the co-founders and general partners at Frontline Ventures. At Frontline, we focus on investing in business-to-business deep tech software companies that are trying to crack transatlantic expansion. So we work with European companies that are trying to get into the US, and so we're on our 4th fund doing that. And then we also work with US companies that are trying to get into Europe, which is the 2nd biggest market for them. We manage about $500 million, and I joined the Kauffman program about 14, 15 years ago. So
we're classmates. You and I, we did it together. Jessica?
Great. Hi, Jessica Owens. Pleasure to be here. Thanks for having me. My fund is called Initiate Ventures. We have a very focused investment strategy. We invest specifically in healthcare, life sciences at the intersection of technology and AI. We're based in San Francisco, and we're deploying now from Fund 1. I was a member of the Kauffman Fellows Class 12, so just 2 years before these gentlemen. And I should say maybe in my introduction that I have sort of had 3 careers in one. So I started my career as a scientist. I was an investor at a firm called Kleiner Perkins, where I really learned how to be an investor, and that's where I was a Kauffman Fellow. And then I spent the next decade of my career as an entrepreneur, starting companies, and actually started a company that became a unicorn and exited, and then built my firm. And so I'm about 4 years into my first fund deploying it. And so I mention that because I think it it informs the difference in some of how we'll answer these questions today. So with that, I'll pass it to Phil.
Hi, everybody. I'm Phil Wickham. I'm a co-founder of Sozo Ventures. Manage about $1 billion with offices in Redwood City and Tokyo. I basically do what Will does, except we cross the Pacific instead of the Atlantic. Very similar model. We just copy whatever Will does. I was in the charter class of the Kauffman Fellows, which is another way of saying the first class in 1995, which is another way of saying I'm really old. But I'm happy to be alive, and I'm happy to be here.
Okay, great. Thank you very much for your presentation and very concise but very deep, actually, self-introductions. I have a few questions. First of all, actually, it's an amazing data, which I heard is 1/5 of all unicorns were created by Kauffman Fellows, community. This is amazing statistics. And with that, how do you do that? What is a secret sauce to make it? How do you select your people to invite your community, or what do you teach and what you don't teach? And so these are kind of conversations we want to have. And this is not the classroom, and this is more like a bar conversation, hopefully, without any beer. Okay, so let's have why don't we dive into maybe Jessica?
Sure, I'm happy to start. So when I think about a unicorn, or even the potential for one, and that's kind of it's a funny phrase. So that term was actually coined by a former colleague of mine named Aileen Lee at Kleiner Perkins. And the idea, if you don't know it, the idea of a unicorn is that it's actually a mythical creature that doesn't exist. And now we have, of course, these exits that have yielded so much in returns for investors. But when I look for these big opportunities, I think you have to kind of ask yourself the question is, if you assume success, is this thing that you're doing, is it going to change the world kind of forever? Like, will the field that you're working in be forever transformed by the success of this company? And will the understanding of the way that business operates kind of forever change an industry? And so I think for me, at least in healthcare and life sciences, that has to be true for something to have the potential to have that kind of exit. I'd be curious to hear how my colleagues here think about that, but that's the way I think about it.
Yeah, Phil, I'm sure you have a few things to say.
Yeah, same thought. I'm gonna add something different to why I think this happens. And I know my own experience of training for well over a decade under the greatest minds in venture in our space that we focused on, and how much I learned from them. I know the people that you trained under, Brooke Byers and the likes, and I think a lot of that is the selection of the people, but also how long it takes to train, how good the people are, and how patient we are. I think that's part of it. I think the other is syndication. So we work together on a lot of deals. I don't know, Will, how many investments do we have together?
Yeah, probably 3.
Yeah, 3. And
yeah, but looked at lots.
We have 1 and 2 now in a very young fund. We have a ton with Alan. So I think a lot of it is how we also can team up because we can add complementary skill sets or geography or stage expertise to the syndicate. That would be, I think, a big driver for me.
I see. So it sounds like you have a very strong portfolio strategy about each class. Is it a fair statement?
Very, very fair. Absolutely.
Okay.
I mean, it's a huge part of the business that doesn't get talked about.
Okay, great. Any comments, Will?
Yeah, I think just following on from what you were saying, Jessica, about learning about these unicorns. I think when you start in venture, you think that the returns can be, if it works out, can be slightly bigger than other asset classes. But it takes you a while to convince yourself that actually the magic part about venture is that the upside is unlimited. So if you're in public equities, it's not unlimited. If you're in real estate, it's not unlimited. They're all within bands. But venture truly is unlimited. And so it takes, I think part of the Kauffman program was actually getting you to believe that that is the case. And then truly embracing that. That is the magic of venture. And if you want to be successful in venture, you need to believe that, act like that. And that comes down to then, I think the other part of a lot of the learning in Kauffman was learning about the interaction with the entrepreneurs, the founders, how to make that communication so high quality that you lead to very successful outcomes that are very fast, very ambitious. So there's a lot of learning in that.
You know, oh yeah, go ahead.
So if I add just one thing is that, in the same way that we think of entrepreneurs, if in this room all of these folks were entrepreneurs right now, there's nothing that we can do to say you're going to be a unicorn, you're not going to be a unicorn. There's just no way of doing that.
That's right.
At Kauffman, we think of the venture capitalists pretty much in the same way. If all of them instead were venture capitalists, there's no way of telling you're going to be a great venture capitalist, you're not going to be a great, there's just no way of knowing. But in the same way that entrepreneurs start their companies and venture capitalists start their own firms, they're also entrepreneurs. There's an apprenticeship. There's certain things that entrepreneurs have to do right, how you build your team, how you stay disciplined and structured. But then there's the other side of it, which is you have to be contrarian to the rest of the market, and you have to be right. So if entrepreneurs have to do that, so follow the discipline, follow the book, follow the learnings, but also be contrarian and be right, the same thing happens to venture capitalists. So I guess, if you don't mind here, I'll just switch the question a little bit to, I think we know how you build your venture capital firm because you follow the book in the same way that entrepreneurs start the company. But what are you doing different? What are you being contrarian, and what have you been right that the rest of the world hasn't been able to do that?
I'm happy to kick off on that one because our contrarian view probably developed a bit over time. We started off originally as an Ireland-only focused firm. I'm based in Dublin. And we gradually increased in our geographic footprint over time. The reason we did that is we started believing that in order to be a great investor in your own local area, you needed to be a great investor in other bigger markets to understand what the competition was like. So, we operate in Europe today and also in the US, but when we meet investors in Europe, we always say, we don't think you can be the best investor in Europe unless you're also a great investor in the US. So it's just that knowledge, that network, it makes you better. And so I think that was important in Europe, certainly, for working with a lot of the governments, is they were very focused on their own geography and making sure that the VCs funded locally. But I think ultimately the successful investors were those funds that started investing across Europe and then started investing in the US. And they brought some of that learning and understanding of the game back into their local geography. So that's, I think, unusually for us. We're a firm that started as a European early stage firm that is now investing in the US as well.
Yeah, I think for us, I think the contrarian thing that we do that's a little different than any venture firm is because we come from such deep entrepreneurial roots ourselves, and we have built companies, numerous companies, some work, some haven't. We really love to dive in very early with our entrepreneurs, and I think in many ways we don't act like traditional VCs in many of the companies we work with. About half of our portfolio, we write seed stage checks that look like every other venture capital firm. And about half of our portfolio, we work with founders far before they're ready for that seed stage check, because we have some kind of deep knowledge of what they're trying to build from a prior life when we were also trying to build something similar. And we will take on operating roles and plug in talent and give a couple days a week to really scale something we believe in and recruit talent to it. And maybe there's a mad scientist, and I mean that in the best way, right? Who has a brilliant idea. We will bring in a great CEO leader to be matched with that person and help shepherd that company to a point where they can raise a successful seed round. And oftentimes other VCs are like, why do you do this, right? It's just too hard. But for us, I think it, one, creates a real economic advantage for our LPs. We own common stock. We're able to own more of those companies. And so it creates an economic advantage in terms of our return. And two, for us, it's a lot of fun, and it's what we really know how to do and we enjoy doing. And so I think it gives us an edge that's really different from a lot of firms that sort of invest in the same kind of universe as us.
Yeah, I guess our contrarian play was Japan. So when Ko and I conceived of this idea around 2010, I don't think there was a single person who told us it was a good idea. There's nothing in Japan, no one goes to Japan, why don't you go to China? Neither of us knew anything about China, so we didn't go to China. And so we just started building an ecosystem, infrastructure with a large number of corporations. We invested very heavily in the university relationships, ministry and regulatory relationships, and now we kind of laugh because everybody's coming to Japan, and we don't really see the big difference in 15 years. It was cool back then, it's cool now, but here we are. So that was our, we feel like we were right. So,
yeah, just want to highlight this point that venture capitalists are not necessarily seen as entrepreneurs, but they are. I mean, like, you hear your stories, and you've been at it for 15 years in multiple jobs, 15 years launching this firm. And you had to pivot in the middle of the road when you started, in the same way that entrepreneurs start with one idea and then they have to pivot a little bit here. It's exactly the same story. It takes time, this apprenticeship to success, and there's nothing that accelerates it. Hiro, do you want to maybe shift to Japan? And how do we see the market? I would like to hear from you, if you don't mind, but how do you see this market in Japan of venture capitalists? Very local versus global, entrepreneurs versus corporate VCs. What are you seeing?
Well, I mean, first of all, today's really theme is how to globalize the ecosystems, and not only startups, but actually mindset, and also actually venture capitalists as well, and as an industry as a whole, because it's not a local game, it's a global game. And I feel that although we have such a wonderful global players around the globe, I think we still have many actually local players. And local players are not bad. However, we can add more global players to this game. And I think that's why actually I invited you guys to be on stage, really to talk about the game you are playing globally. And with that, actually, your comments are creating more questions for me, so let me shoot a few of them. And first of all, regarding your program itself, the Kauffman Fellows program, is it like a combination of the classroom or networking or experience? How do you train these wonderful future venture capitalists at Kauffman Fellows? Tell us a little bit more about it.
So it starts with selection of people that are committed to the long game inventor, and the long game inventor is 30 years. And you've been at it maybe for 3 years. So you have 27 years to go. You're just learning. And the problem of venture capital is that you're making a lot of decisions right now. You're already writing checks from year one, big checks, and you don't know if you're doing it right until year 12. So for 11 years, you're writing these checks and you're giving these presentations in panels thinking that you know, and nobody knows if you're successful or not. So you don't get rid of the term emerging manager, which is almost like rookie, until 12 years. There aren't that many industries that are so harsh of you doing stuff without knowing if you're going to be good at it. And then after 12, 13 years, then you know, and you can continue to grow. So we select people in their first years when nobody knows if they're going to be successful. The education program is very intensive for 2 years, where I would say half of the program is about self-awareness, know your strengths, and understand your weaknesses. And understand that in this industry of venture, you're going to learn from entrepreneurs that are presenting you stuff that you've never heard about before. It's okay to not be the expert, but you have to be smart enough and good enough at that particular challenge really fast so you can make an investment. So half of the program is just self-awareness in venture, and then the other half is the skill set and the apprenticeship to become better at what you do. And then the last thing that I would say after we recruit the best, we get them through this 2-year education program is, now that we have 1,000 venture capitalists in our network, how do we make sure that you stay connected and engaged? And this is one industry where it pays off to share openly with the rest of your venture capitalists. It's not so secretive in that today you see the best startups in the world. They have multiple venture capital firms backing them up. So you add value. It's an additive industry. The more venture capitalists you bring, obviously with a limit, right? So we encourage a lot of activity within our network, and that's sort of perpetual learning in the industry where Will and I, we were in this 15 years ago, but you keep learning every year by meeting some of the past fellows, right?
Yeah.
So that's how
If
we
you
do.
don't mind me jumping in, Fernando, just bringing it back to the data you had earlier on. So there's 940 fellows globally. I remember when I started on the Kauffman program, year one of the program, I was trying to become an expert in every industry. And I would find myself Googling, if I was looking for something on drug discovery and AI, I would Google drug discovery Kauffman Fellow. And up would pop somebody who in their bio said, I did the Kauffman Fellows program and I'm focused on this. And I would contact them. And all of a sudden I went from knowing nothing to almost nothing, but I had contact to the right person. So it's kind of like, I always thought about, an MBA program is a high value activity to do, but at the end of the day, a lot of the people in your group are probably not relevant to you longer term. In the Kauffman program, almost everybody is relevant to you. And so being able to draw on that network and get a 24-hour response to a very specific thing where I can contact Jessica and say, you're the expert in this thing, can we talk? The value of that for a venture capitalist when you're searching for these weird and magic companies that are not obvious, that's extremely important. And that's the thing that, Kauffman, one of the things that Kauffman brings.
Yeah, I think Jessica or Phil, do you have any specific example where you guys were helping each other regarding your maybe deal sourcing or actually, any venture capital activity? Any specific examples you have?
Want to talk about ours?
Yeah,
Go ahead,
yeah.
because I don't understand it.
Tensor? Or which one?
Either one. No,
Okay.
yeah, Tensor's a good one.
We could talk about a lot of things. So first, I should say, Phil sends me a lot of people, which even that is really important, right? So when Phil sends me a person and says, maybe with one sentence in an email that's a little cryptic, you should talk to this person, that I know that I really should talk to that person, right? There's method behind the madness, and he's really thought it through. And so I really value people that Phil sends me, and I have worked with many of them and appreciate all of those intros. And then we have a co-investment together that I'm really excited about, and we had, I guess, come to this because Phil sent me a person who ended up working with us, who's wonderful, a woman named Samira, who worked with us on the entire inception and thesis around this particular investment. We made the investment, and then we were looking for syndication partners. She happened to be doing some work with Sozo, and she said, I really think you should call up Sozo. I think they would be interested in doing this. And so things happened, and we ended up having Sozo as a great co-investor. And actually, that deal itself, that company, is 3 Kauffman Fellows. So our other investor is also a Kauffman Fellow with Christina Jenkins at Convergent. And so that particular company, the entire syndicate is 3 Kauffman Fellows. So that's a pretty cool one. And so yeah, we share a lot. And I think the thing that makes those interactions really different from interactions that we have every day with lots of investors is I think there's a baseline of trust that really it's a foundation that you kind of there's quality in the interactions that everything else just feels, I think, transactional a lot of times with other people who you may know and like. But in the Kauffman Fellow relationships, I think there's just a foundation of trust where you move a little quicker and you do a little bit more homework for someone, and you're excited to work with a person because you kind of know this is going to be a good working relationship. So I've really enjoyed that about co-investing with fellows.
Can I come back to your first question? I want to share some thoughts, and I want to get the reaction, because I've been doing this a lot longer than anyone on the panel. But the way I always thought about our approach to education is, so you would be a Kauffman Fellow. This has never changed in 30 years. Over 2 years, 9 times every quarter, you got 3 days of deep immersion into some particular form of content. Could be diligence, it could be how to run the firm, and we'd go into these things, and my reaction was we'd get the best operators in venture in the world, and you'd come out of those 3 days completely overwhelmed by what you had learned, and it felt somewhat hopeless. And after about 2 years, you realized you learned a ton of stuff, but you also have this giant mountain of questions that you have to go answer, and that never changes. So after 30 years, for me, the more I learn, like every day, the great thing about this business is you're going on some adventure, some wild adventure of learning. And for us, it could be communications in space or underwater nuclear power. I could go on and on and on. The more you learn in those spaces, the more you realize you don't know.
Right.
And as you get older, it's laughable for me, going back 30 years, to how simple and slow the business was. And now it is so fast and so complex. So my learning curve is just going like this. And I'm signing up for 10 more years. And that's going to take me to my 70th birthday. And it's really intimidating to keep up with the industry. So if you think you do this for 10 or 20 years, it's a lot like being a really high-level doctor. If you think you do it for 10 or 20 years and you're going to be all-knowing, this is not the right business for you. If you want to be an absolute perpetual student, then do it. And that's the beauty. I can call Jessica on a problem that I don't understand, and in an hour I can get her 20 years of expertise because she understands it so well, and we do that for each other all the time. And that's a really unfair advantage.
I would add, Hiro, that venture capital is a relatively new industry. I mean, in the US where it started, it's a 50-year-old industry in 1975 when it really grew up. You have some firms that started 80 years ago, but it's not until 1974, 1975 when the pension funds in the US started to invest into venture capital. So that's 50 years ago. If you think of how old is the venture capital industry in Ireland, it's 15 years ago probably. In Latin America, it's 15 years ago. In Japan, my guess, it's also pretty much 15 years ago. 15 years is nothing. It's really nothing. So it's hard to point to a person and say that person is an expert in venture capital, also because, and I remember these years ago, we were talking to one I'm not going to say the name, but it's one very big Silicon Valley firm, like one of the top 3 names. And one of the founders of that firm, he was on a panel, and we were asking him questions of, when are you going to start investing outside of Silicon Valley? And his response was, never. Everything happens in Silicon Valley. It's the only place where innovation will happen. It's the only place where entrepreneurs have access to a $10 billion market. That was 10 years ago. Okay, so there's no experts in venture capital. We don't claim to be the experts at Kauffman. We claim that we bring to a network of trust, like Jessica's saying, people that have the same value system of doing this for the entrepreneurs, less about the transactions, and a commitment to learn for the next 20 or 30 years of your career. And that's what we bring to the table.
By listening to all of you, I think actually the real value of Kauffman Fellow sounds like to me that it's a very intentionally created, diverse portfolio of talent, funding, and also venture capital business model as well. Because you guys are selecting, the selection process is very diverse, from the very beginning. And also you are pushing each of you to go through a self-awareness process as well. And then you state connected after graduation, and also you select classes every year. So it's not a one-time transaction at all. It's a very accumulated, also diversity-centered portfolio approach, and that's why you guys are so fundamentally strong, and that's why you can create 1/5 of unicorns around the globe. Now I'm getting, because it's a wonderful, diverse portfolio you have. But that portfolio didn't happen by coincidence. You have a very clear intent, actually. First CEO of Kauffman Fellows, you did have a very.
I wasn't the first, but I was the first Kauffman Fellow. I was the first Kauffman Fellow, but I wasn't.
Oh, okay.
I wasn't the first. I took over in year 13.
Okay, but that was a very intentional effort. Is it true?
Yeah, so diversity is an interesting word. I think on all of the surface definitions of diversity, gender, age, skin color, backgrounds, professions, we check all the diversity boxes. But I think where we don't have a lot of diversity is in the humanity.
Humanity.
So if I meet a Kauffman Fellow from, say, class 26 who I have never met, but Jessica recommended to the program, the level of predictability of that person's humanity is going to be very, very high. And I think that's, so it depends on what you call diversity. So I think in some ways we look really diverse, but I think we tend to be very predictable at a human level.
I think.
Yeah,
Sorry, I think one of the areas, Phil.
Except for the Irish guy.
I know one of the areas in terms of diversity of the Kauffman Group when you came in was focusing on the global expansion of the Kauffman program, because up until that point it was very US focused. And I think, Phil, you and others recognized the importance of this becoming a global business. And I guess connecting back to the title for this event is like this importance of connecting globally. Like, why does that matter? So if you go back to what I mentioned earlier on is like, it's unlimited upside. It's very focused on a small number of companies of the most ambitious founders. So if you think, okay, that's the person I need to get to, those people, if you ask somebody, are you ambitious? They don't know how to answer that question. If you ask them, how soon do you want to be in Japan and the US and Europe? They know the answer to that question. So the people who you're trying to find want to be global. And so if you, Kauffman as an organization, sets us up to be globally connected, you find those people. And that's why it's kind of selfish. It's kind of why the program is designed this way. It's to be able to find and work with those great entrepreneurs. And that's why the global connectivity, I think, is so important.
Yeah. Great. I would like to shift the conversation to a little bit something different, if you don't mind. And I think this question is to everybody. Okay? And that is, what is a common misunderstanding or even myth about venture capital as a profession or even as an industry or as a business? What is the common misunderstanding you encounter in your business as a venture capital? Do you have anybody? Yeah. Any reactions?
You want me to start?
I don't know. You didn't get to answer the last question.
Yeah. Oh, common misunderstanding. Gosh.
It's a lot.
There's so many. I know.
So
Where to
many.
begin? I think one of the things, a common misunderstanding, I will say for me, is I think everyone appreciates that we have to say no to the vast majority of things that we see. The funnel of, thousands down to perhaps 5 in a year or fewer. That process is not that fun, actually. Saying no over and over again it's not great. It's not fun. And there is, I think, a misperception that you have to remain an optimist while you say no all day long. And that's not easy, actually. It's not that easy to do. And so I think there's a misperception that like venture capitalists walk around thinking they're better than everyone else, they're smarter than everyone else. But the reality is like our business just requires us to have this selection process. Our funds require us to only be able to make a few investments. And my heart is always with the entrepreneur. That's the other thing, because that's where I come from. And so I try to, you know, with as much civility as possible, you know, explain to people why I can't invest in their business. But I think it is a misconception that it's easy to say no to everything all the time, and then, you know, get up and talk about like why I'm so excited about all this technology and where the world is going. So I think that's a misconception. It's like you have to keep your brain so optimistic all the time, but then tactically every day you have to say no like 15 times a day.
Yeah, I think, and I would love to hear what Phil and Will have to say about this, but there's, to me, the biggest misconception of a venture capitalist, and part of it, we earned it, unfairly, but we've earned it, is a certain sense of arrogance, you know, venture capital associated with money. And you can imagine somebody at this penthouse of a building who has a lot of money and looks at startups and says, I know better than anyone else. I'm going to pick you to give you money because I'm so smart, I'm so great. That's the biggest misconception. I know there's people that behave like that and think that's the way it is, and then they burn to the ground. It is a misconception because if you are really a venture capitalist, you know it's damn hard to do this job. I keep saying venture capitalists are entrepreneurs, and they go through the same sufferings as entrepreneurs. Will, Jessica, Phil, they had to go out with their business plan to raise money from investors,
Right.
to execute on a plan that who knows if it's going to work or not, and there's competition and it's intense. These guys go through exactly the same process as any entrepreneur. So this misconception of the arrogance of a venture capitalist just throwing dollars at startups, that's not it. It's a completely different game, completely difficult compared to anything else.
Can I just follow on from, thanks Fernando, from a comment you made earlier on. I often describe the venture industry as it's set up as the industry of rejection followed by failure, but then with some, outlandish outcomes. And it's funny, people who've been in the industry laugh because they understand how it works. And it's as you described it, you will reject a lot of startups, a lot of those will fail. If you're doing venture correctly, you reject a lot of startups, a lot of those fail, and only if you do those things have you set yourself up to actually have work with these founders that have these huge outcomes like the Coinbases and the Twitters and these companies. So sometimes I think in our interactions with the investors in our funds, they're looking at the failure rates in the companies and they're thinking, high failure rate is bad. In fact, high failure rate probably means you're backing some extremely ambitious founders, right. And that's kind of what's required to do it. So I think that's kind of a misconception, is a lot of startups in the funds failing is a bad thing. Actually, that's required to be successful. So it's hard to get your head around that even when you're working in the industry.
Yep.
Yeah, that's right.
Yeah, I have a quick thought on this. And I think this is something I see in Japan a lot that worries me, I guess is the right way to say it, is in Japan, there's this conversation like, I want to be an entrepreneur and start a company and I want to take a company public. And I think that's really backwards. What I have seen in the great entrepreneurs is they begin with an obsession to make someone or some organization's life or existence so much better than it is at a much lower cost than anything else they could deliver. And from the testing and validation of that assumption that there are people out there that need this, then a company will follow, a startup will follow. And our job is to help them design and shape and nourish that company. And then if they execute it extraordinarily well, for how long do you expect to be in a company before it goes public? Will you write a seat check?
7.
7 years. The data says 9.8, but she's really good. But
I've just been an optimist.
Yeah, but the point is you have to grind away 24/7 for 7 to 10 years, and you go public. The great entrepreneurs who go public do not get excited about it. It's just a financing round, because after they go public, they've got years and years of execution. So we're looking for people that are obsessive over the thing they're trying to do. We're not looking for people that want to be fashionable and start a company. That's not what we're about.
Excellent, excellent. Well, we have to close the session soon. However, I would like to give you, each of you, I want you to have one advice from each of you, how to globalize Japanese startup ecosystem or venture capitalist industry. Basically, any specific advice to us in Japan regarding the globalization. And so perhaps, Fernando, you start, and actually, Phil, you start, and you finish. And by the way, before I forget, today we didn't have a chance to interact between the audience and the Kauffman Fellows. Tomorrow, at the same time, at 4 o'clock, Fernando will be over there, the investor stage, just across the corner, so that we can have a dialogue between the audience and us, and particularly, from the CVCs and the venture capitalists. I think you should be there tomorrow at 4, so that we can have a conversation together, live conversation together. So with that.
Okay. Quickly, I think there's 2 kinds of entrepreneurs. There's a Japanese entrepreneur, and there's a global entrepreneur that happens to carry a Japanese passport. And the globalization in Japan will happen entirely through the entrepreneurs, and then supported by all of the rest of us who have that job.
I would say that entrepreneur with the passport, just pick something you can't put down. You just have to you have to eat, breathe, sleep, dream the thing you're working on, and know that you're solving a problem that is globally important. And that passion that you have for it it's really what it requires, because there's so many bumps and bruises, so many unexpected hiccups. So you just have to pick something that you're kind of obsessed with. That would be my piece of advice.
And maybe more focused on the ecosystem. I think for any ecosystem trying to develop, there's an inclination, which is logical, is to focus on the ecosystem itself. So my advice would be to think globally from the start, because I think success will come by understanding the game and the competition. And if you're not playing internationally, if the local VCs are not playing internationally, or if the local founders, they just won't get to understand what the competition looks like. So it's kind of counterintuitive. You need to be away in order to kind of work locally.
What I would close with is, for the last 25 years, I live on a plane every 2 weeks in multiple countries, and probably the most exciting, or the top 2 most exciting ecosystems to me right now is right here in Japan, where I do think that this country, over the next 10 years, is going to be transformational in the global stage of venture capital, both from an investment perspective and from a startup perspective. There's no way it's not going to happen. I just absolutely know it will, which is why we're here right now, and we're so excited to be here. We're not going to miss this for a moment. So anyway, just thank you again for having us here, and thank you for all of you for being here.
Yeah. So with that, I'd like to thank all Kauffman Fellows. Thank you very much for being here, and congratulations for having a good session. Thank you.
Thank you.
Thank you.
And see you tomorrow at 4 over there.
Thank you so much for a very inspirational session.